First, let me point out on the margin side. So this 3 to 3.5%, analysts have pointed out it's been there over the last 4 years or so, within that range. Is there something that is structurally that needs to change at Axis for that NIM to catch up to what larger peers, are with 4.5%? There's a 100 basis points gap between you and your larger peers. How does that get captured?
So, it is a journey, and I'll tell you why it is a journey. There are 4 broad areas because of which our margins are lower than the peers. One is, and peers I'm comparing to, let's say, ICICI and HDFC to start with, because the size is similar to them. First area is that if you look at, in case of HDFC, the retail, the mix within retail, they have a higher unsecured portion of assets than what we have, while their mix of wholesale retail is similar to ours. So because they have a higher proportion of unsecured lending than what we have, they get a lift in comparison to us.
Yeah.
ICICI, the share of retail itself is higher, so they get that lift big. So, we are third for a reason. So the product mix is a reason. That's point number one. Point number two is that the cost of deposits of these institutions, because of what they've done in the past and how they built their deposit franchise, is another reason. Third is that we have a much higher proportion of RIDF bonds. That means because we have not met the priority sector targets in the past, our share of RIDF bonds, which carry an interest rate 2% below the market rate, is another drag on our NIMs. And fourth is that in cases, some of our investments are earning lesser, and it is earning lesser because, again, it has got to do with the deposit franchise. If I have the deposits where the liquidity or the outflow is on a calculated basis more, so I have to invest them in government securities while the other banks can deploy them in other assets. So that also has a NIM impact. And in some cases, their investments are also earning them slightly more than me. So we have done a full analysis. Now, why I said it is a journey is because, it can't be changed overnight. It will take time. So, and especially what has happened in the last quarter is that the growth in our overseas loan book led by trade finance doesn't get reflected in NIMs, but is reflected in the fees side, and we've done quite well on the fees side. So people, when they look at NIMs on a standalone basis, they will obviously comment that NIMs are impacted. But that does not take away the fact that as we deepen our existing liability relationships and acquire quality customers as part of our premiumization strategy, it will improve the share of our low-cost deposits. It has been improving. It needs to improve further. So we should see a release of available liquidity to lend, and that's going to be a driver. On the asset side, given the disbursement momentum, I do expect the retail to continue to do well, while we've been holding back a little bit on the, those large corporates, because the interest rates that you're earning there are much lower. So it's not that we're not doing business, but we are not going gangbusters there. So the share of retail will improve, and hopefully that should get reflected in the NIMs over a period of time. I mentioned the RIDF bonds. 4% of our balance sheet is RIDF bonds. So last year is the first time after a long time where Axis met all the priority sector targets, and there was no allocation of RIDF bonds. If that can continue, our share of RIDF bonds will come down, and so again it will reflect on the NIM side. Yes, it is important, but as I shared with you very openly, that these are all the areas that we have to work on, and each of these areas will take time to fructify. And as they fructify, it will reflect in NIM. So it is not a structural. Yes, it is a structural problem in terms of where we stand today, but are we solving it? Yes. Can it be solved? Yes. Are we confident that we'll get there? Yes, very confident that we'll get there. But it is a slow journey. Can't be done overnight.
What is the time frame that you're looking at?
More unsecured, yeah.
What is the time frame that you're looking at?
Couple of years.
Okay, couple of years then.